What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers here. On the left, we have the broad market, comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. I'm sure you're noticing all of this red right here. Of course, Friday was a pretty nasty day across the market, specifically in Facebook, down over 8% there. So we're going to point out some key levels up and down in an objective fashion. That way you have a plan to act on this week. If you think you know someone who might benefit by seeing this type of analysis, feel free to share the video along with them. And don't forget that all of our free resources, including the Swing Trade newsletter, Instagram, and Discord server, are all linked down below in the description. Let's hop in. So starting off on our SPY weekly chart, the analysis here remains quite simple just because the structure hasn't changed over the last couple weeks, but where we sit in terms of that structure is what has. So once again, we're retesting that $300 psychological support. It's the 50 SMA here on the weekly and daily 200 SMA just about. The key question you're going to have to ask yourself early on throughout the trading week is, do we resolve to the upside or do we resolve to the downside? I think it sounds so simple, but it will really be telling in what the rest of the week could look like. What else we're looking at on the weekly time frame is the structure of the past 2 weeks candles, in sense that we have two upper wicks forming that are relatively large, almost the same size as the body of those candles, indicating to us that there are some stronger sellers here above this 307.90 or 308 level that we've talked about in the past couple videos. Those stronger sellers are there, and if we do get price acceptance above 300 still, if we get anywhere in this level, I would expect some sideways chop based on the fact that there are sellers there. It would really take some strong buying action to get it up and through that level cleanly to potentially retest the upper end of our consolidation range. To the downside, though, I do just want to point out once again all of the strong support in here that we do have. We'll talk about that more on the daily time frame. And lastly, to keep in mind some perspective in where we're at in the overall uptrend of things, drawing in our Fibonacci analysis. If we look at the first level, we always pay attention to the 38.2. Where do we sit in relationship to that? Again, SPY could continue to pull back all the way into 283.30s just about before we even have to start thinking about, okay, is this any more than a healthy pullback? Is this something that we have to start worrying about? Again, plenty of room to run to the downside, keeping in mind that, this is the overall context of the move. We are still looking at what looks like a weekly bull flag to play out. And now moving to the daily time frame, I want to leave it zoomed out for just a minute here so I can point out the fact that we had a support trend line that looks something like this. Of course, that is no longer in play, so we've since removed it. But there is a new one that could potentially be in play. We'll determine whether or not this remains on our charts early in the week, whether or not this resolves to the upside and we see a bounce up to our 308 level, and this support trend line certainly acts as support. So we'll keep that on if it does bounce, but if it doesn't, then we'll just keep it off. For the sake of this analysis, we'll leave it off, and we'll zoom in a bit here to get a little bit of a clearer picture on price action that we need to pay attention to. So once again, remembering that our consolidation zone looks something like this. $300, the key level going forward this week. If we bounce, we already talked about the 308 level, but if we go higher, the levels that you need to be watching for are the 311. 95, so 312, just about the whole dollar there, acted as strong resistance in this area. If you remember when we broke it down in last week's video, all the touches that we had to that level. So that will be the first key target after 308. Anything higher than that, and we have this really nice triple top here at 314.32 that we need to be watching for any sort of upside continuation. If we can go higher than 314.32, then I would expect this gap to fill up to 318.22 and then potentially retest the upper end of our consolidation range up here at 323.44. But that is picture perfect case scenario to the upside there for the bulls. As we talked about on the weekly analysis, that I would expect some chop in this area just because there are some stronger sellers that are hanging out up here. To the downside, though, if $300 does break, lots and lots of support below, which would indicate to me why I think that, it would be tough to see any sort of major reversal here. We have our 50 SMA on the daily chart. We have the gap that remains in here, remembering that that is a fake wick. Gap closes at 295.64. We have, if we get rid of that for a second, our previous double top, which was in here. It then acted as support on this candle and on this candle. So if we get back into that, I am expecting it to act as support there at 294.37. And then, of course, the top of our last remaining gap in the chart here, which is between 291.92 and 286.32. So lots of strong support, as we've talked about, in this area of the chart. If we do start to get into it, I would expect chop, sideways action, potentially a bounce to retest and backtest the $300 level, and no real, I wouldn't really expect a strong move to the downside here. It could happen, but based on all of the things and factors that we're looking at, I don't think that's the likely scenario. One other thing that I do want to point out is that we do continue to see lower highs form. So we have, or higher lows rather, excuse me. So we have a low here. We have a higher low, which has been established here. Again, $300 is going to be the key, whether or not we resolve a new higher low and bounce to the upside, or if we start to put in a lower low and the momentum could shift here. We've already put in a lower high in terms of what's happening here. It's, again, all going to come down to, do we see a new lower low form? The main takeaway on SPY is, once again, $300. So moving over to the Qs now, there's a bit of a learning lesson I want to cover briefly. It's the fact that we printed an inverted hammer candle here on Tuesday's price action. It happened up at all-time highs. Of course, that is where we set the new all-time high in the Qs. And it's also at the resistance portion of our trend channel. And what I'm getting at here is it was the picture-perfect setup for watching for a pullback, right? We have an inverted hammer at resistance at all-time highs. And what I'm trying to say is when you're trading, when you're watching throughout the week and you see a setup like this start to happen on one chart in the broad market, you got to apply it to the rest of the broad market as well. So the SPY and IWM also starting to look for pullbacks when the Qs showed us its hand with this inverted hammer. It's not going to happen picture perfect every single time, but because the indexes don't move too out of sync, when one starts to show you a clear sign of a pullback, again, just apply that to the rest of what you're watching. So in terms of levels going forward this week, we are back at the support portion of our trend channel. As you can see here, it's taken a few days to resolve in the past, 1, 2. Over here, it took about 3 days to resolve and really get a bounce going to the upside. So we're going to give it a little bit to see whether or not we get a bounce. Again, based on what SPY does at 300, will also sort of dictate what the Qs do. If we get a bounce here in the Qs, then I suspect SPY will remain above 300. And again, that's sort of the push and pull between SPY, the Qs, and IWM. When one thing does something, then you're going to want to apply, the direction of that to all the other indexes. And when they start to line up with these technical levels, it just makes the setup that much better. So if we do remain above our support trend line here, the first key resistance level that we want to be paying attention to based on all of these touches is, of course, here at 242.50. Anything higher, we've sort of adjusted our level here to 246.50 based on this double top here. And of course, resistance on Thursday. Higher than that, we have our new all-time high up at 251.15, and anything higher is blue sky territory levels, whole and half dollars, as well as any intraday levels that form. Of course, the resistance portion of our trend channel will also be in play if we start to get up into those blue sky territory levels. To the downside, though, if the support portion of our trend channel gives, then we're looking at first support at 237.47. That's our previous all-time high in the Qs, which is going to be a really important level. If that back tests and hold as support, then again, watching for a bounce to potentially retest the 242.52, but if it gives and we break and SPY essentially goes below 300, then a potential move for continuation lower is at 231.90, so 232 just about. 50 SMA will start to coincide with that level depending on how the week plays out, sideways, up, or down. And of course, anything lower than that, we're looking at 227.40 based on all of the touches we've had in this general area of the chart. And lastly, checking in on IWM Russell 2000 and the small caps. What I find extremely interesting about this setup is that we have 3 equal lows here, as opposed to like in SPY and the Qs where we had lower lows forming every single day on Wednesday, Thursday, Friday. So interesting to see the push and pull that's going on here. I think if SPY breaks down below 300, of course IWM has the potential to flush underneath that 136.31 equal lows to our next support below at 134.50 just about. With that 50 SMA there, it should provide a super support first touch bounce, looking for at least a retest or a back test of that 136.31 if we get into that level. Anything more than that, SPY would have to start resolving to the upside of 300, maybe break back above, and we could see a continuation play here to retest our next resistance up around 139.77. Higher than that, and again, I think the Qs and SPY would all have to be supporting this move to the upside. We could potentially come in contact with our next resistance point up here, the strongest of which the triple top that we're seeing most recently here on the interaction with 145.07. Anything higher than that, do keep in mind that the 200 SMA on the daily chart is going to slowly start to creep down and coincide with that 145 level, so that will be a strong resistance there, but higher. And again, I think it would take the whole market moving in quite a strong fashion to the upside here Our next resistance up top is at 152.38. I think, Qs would be having to make new all-time highs, and certainly SPY would have to be at the upper end of the consolidation range that we're talking about for 152.38 to be in play here on IWM. To the downside, though, if our super support here doesn't really amount to a nice bounce, say we get a bounce and a retest of our 136, and then rejection again, we will start to target the top of our gap fill here, which is at 130, and the gap closes all the way down here to 125.48. Anything lower than that, and we have a previous resistance area, so all these touches in here turn to support once, twice, and that level is at 123.20. So if you've made it to this point in the video, I'm sure you're enjoying the analysis. Be sure to hit the thumbs up button and also subscribe to the channel. That way you know every single time I drop a new video. Jumping right into Apple, we did get the breakout trade that we were looking for early in the week, where we saw a breakout over the previous all-time high to get into the low 370s range, and we of course got that on Tuesday, making a nice new all-time high up at 372.38. So we will mark that in as a new resistance point. I also want to point out that we have a bit of a triple top in this area as well, 365.15ish. You can see rejection 1, 2, 3 times, but the point and thing that I want to draw your attention to here is the oversold nature of the move to retest the previous all-time high breakout level at 354.56. I would sort of expect some sort of dead cat bounce off of that level. If we get a dead cat bounce and it continues, then of course we are going to be looking to retest the 365.15 area and then potentially the all-time high, and then anything after that it's going to be blue sky territories. But if the dead cat doesn't really amount to much, say we get the bounce and then it breaks back down through that previous all-time high here at 354.56, then we're going to of course target our double bottom, and it also acted as resistance a few times as well and support. That key level is at 345.30. Anything lower than that, and we have this set of lows in here right around 335.52. So Netflix looks pretty good as well in terms of the oversold nature of Friday coming down into a key support. I wouldn't be surprised to see it dribble a little bit lower, maybe make a couple lower lows in the morning there on Monday, come into our support here at 439.23, and then potentially see a dead cat bounce as well. I think the whole market got a little bit ahead of itself in terms of selling to the downside there on Friday. So this is sort of the setup we're watching for in most of these stocks. But on Netflix, again, we want to see the move into 439.23-ish. You can see all the times prices interacted with that level in here, and then in the past as well. So that will be the key level to be watching early on in the week. If we get that dead cat bounce, the next level to the upside we're watching for is at 449.52. Anything higher, we can see this triple bottom that has formed there. That's at 455.06. And then, of course, we're not going to pay as much attention to this previous all-time high that was set here, but we are going to mark in some new highs up here, and there seems to be some resistance around this area, which is 468.11. Of course, we do have the all-time high up here at 474.01. And then to the downside, if the dead cat bounce, just like Apple, if we don't get that continuation to the upside, instead it maybe retests and then breaks down, we are looking for that 50 SMA to provide support in between the two levels that we have here. Anything lower, though, we are looking at this first secondary trend line to come into play as a super support, coinciding with the 427, 67 support level. Lower than that, and we have quite a bit of chop that's been happening in here, but the key support we want to maintain above is going to be this one here at 414.39, and that's because if we go below that, we would be setting a new lower low as opposed to maintaining higher lows. So keep that stuff in mind. Of course, we do have the primary trend line, this one here, which could be an actor if we break down below 414.39, but all that being considered, that's quite far away. Although Friday was nasty, I do think it was an oversold condition, and I would be watching for that bounce out of the gates early in the week. So Tesla, although it certainly was a red day on Friday, it really isn't that bad in terms of the overall consolidation range that we're seeing. So it's something like this, and right now we're about 50% of the way through that range. You can see we're trading right around our previous all-time high there at 968.99. I think if we can hold on to this set of lows here, of course this trend line is no longer in play. Let's get rid of this and clean it up just a bit. That's of course no longer in play, but if we can maintain this set of higher lows that have formed here from our previous set here, then we are looking good to potentially retest our level in here at 1015.25. From there, that would become a pressure cooker breakout level, of course putting us into new blue sky territories, whole and half dollars, not even really half dollars on Tesla, but whole dollars, $5 marks, $10 marks as we continue into blue sky territories, as well as any intraday levels that form, of course. If we break down below this set of lows, though, we are going to look to target our 911.63 level. From there, there's a few gaps to be filled in the chart. First one fills to the low of this high rather of this candle here at 886.44. But again, lots of support in this area from our previous resistance, previous support in here. Of course, that's the gap fill level, and this is our previous support in here at 866.11. So a heavy support if we do get into this area, especially with that 50 SMA creeping upwards as well. I would expect some bounces to be going on, some chop to be going on if we get into that level. But if there is a clean breakaway in price action and it moves to the downside, a retest and final gap fill to our previous breakout level, which is this one here, is going to be at 833.19. Same thing on Alibaba as we were talking about in Apple and Netflix. Looks pretty oversold to me, coming down 3 strong red days in a row right into a key support level, especially with our rising support trend line as well. I think we do start to see some sort of a dead cat bounce. I'm not sure how high we get, whether or not we retest the 220.31 level, which was previous breakout area here. I don't think, it might not have enough strength to do that, but we might see, somewhere mid-range. I would look for something like that, start to see some signs of weakness, retest the support trend line, and then see a breakdown further. That would be the picture-perfect setup for a move lower. On a break of the trend line, we're looking at targets below 210.30, especially coinciding with that 50 SMA super support, first touch bounce going on there. But if we continue lower than that, we're looking at 207.04, and finally $200, the round number down here, which is, it's been pretty choppy in the past. You can see all the price action that's just sort of chopped around that area. I wouldn't be surprised that, if this does get nasty, that would be the place it wants to go, especially with the 200 SMA starting to coincide with that as well. Volume is increasing here. If we look at the volume in terms of when the selling was picking up. So I do think there are some stronger sellers committing to selling BABA around these levels. And again, I think down is kind of the move it wants to be after we might see some sort of relief bounce, some dead cat bounce there. If for some reason the dead cat bounce amounts to more, 220.31 is the first key resistance we have to battle up and over. From there, we are looking to retest our 225 to 226-ish resistance zone, as you can tell from all the price action we've seen up here. Anything higher, 231.05. Alrighty, so Facebook, this is the culprit that was down over 8% on Friday. Quite a nasty red candle here, right into the 50 SMA, right to a support previous here at 215 just about. And all of these factors, the extreme oversold nature of the move, the fact that we went right to a key support level, I do think we want to see some sort of dead cat bounce off of this level. I don't think Facebook wants to continue lower. It would just be a complete overexhaustion. If it does continue lower, maybe just a little bit below our 215 support, and then the dead cat bounce might happen. But I don't think I don't think it's realistic to expect Facebook to just continue to drop and go right to our next key support here at $200.79. I really don't. There's not too much market structure in between there, and I think a free fall right to that level would be, a little bit too excessive of a move. So if we do make a dead cat bounce, start to form, some inverted hammers, maybe some inverted dojis around here, candles start looking like this, then sure, maybe a potential retest of getting back down into this range could be in store. But again, the dead cat bounce looks really attractive early on in the week. If we get any sort of continuation above our first resistance point here at 222.57, then we're looking for a retest of this level here at 232.22. And then, of course, there is a ton of chop zone up here that we can pay attention to, 235.47, 237.20, and 240.90 just before we get to the all-time high up at 245.19. I don't really think any of those levels will be in play just based on how aggressive this selling was. Sure, we might start to see that bounce as I've talked about, but I don't think we're going to see any extreme follow-through back up to all-time highs. To the downside, though, we sort of covered ourselves with that $200.79 support level, not much market structure in there. And then there is a gap to be filled down here to this high, which is at 196.67. So look out for that below if we do start to see a failure on the dead cat bounce and a dribble back below our 215 key support. So Nvidia looks more like Tesla to me than it does Facebook or anything else that's really gotten nasty on Friday. It is oversold right into a key support here at 367.50 just about. We do have another secondary support just below, so I wouldn't be surprised to see it dribble a little bit lower. It looks like it's been doing this thing where it's consolidating for quite some time, and then it breaks out to the upside, and I wouldn't be surprised to, again, just like SPY, for example, see it consolidate, take some time to resolve before we see the next move either up or down. If we are making a move in the upwards direction, then of course we will have to battle back up through our all-time high that was set here, 385.70, and then from there, blue sky territory is whole and half dollars. But if we break down below our key support zone here at 362.87, it looks like a retest of this one here at 347.41 is certainly going to be in store. And again, we've talked about this in the past. All of these touches in here don't really bode well for a retest of that level. With all the pressure that's built up there, if that level breaks, I think it could get quite nasty and see a doubling of that sort of previous consolidation. So talking about doubling this box here to the downside on the break of 347.41, which would put prices back down around our key support at 326.78. So Microsoft looks really good, although it has made lower lows on Wednesday, Thursday, Friday. It's doing so after pulling back off of an all-time high record setting there at 203.95. So things looking really good for Microsoft. I think this is just a perfectly healthy pullback after making a new all-time high. We're still well above our support trend line. Things are looking good in respect to that. We're going to see if we resolve this to the upside. If we get any sort of bounce early on in the week, we're first targeting our previous all-time high here and resistance point at 198.52. From there, any move higher, of course, going back up to retest our 203.95. There might be a level in between here where we can see we topped out on this day and this day as well at $200.56 just about. So keep that in mind as a bump in the road before we potentially get back up to that all-time high. Anything over that, though, and we're looking at blue sky territories, $1.5 as well as any intraday levels that form. If for some reason our support level does break, if SPY falls to the downside, Qs break its support trend line, then of course I would expect Microsoft to sort of follow suit, in which case we're looking at our next support below here at 190.70. Anything lower than that, and it's our previous breakout area here, which is at 187.25. And last but certainly not least, we have Amazon, which again is looking pretty good, just pulling back off of its all-time highs up here. We can set the new one up there around 27.96. So that is going to be the key resistance, maybe even just before that actually, based on where we topped out there on Tuesday and again on Friday. So that's at 27.83.38. That's just before the all-time high. I would be aware of that level if there was any sort of major swing to the upside, just knowing that, we might not make it all the way up to that 27.96. If we do see any sort of continued pullback, then we're looking at next supports to come back into play here to 26.59.17. Next one below 26.24. 25.77, and then the ultimate support that we really do want to hold, which is the breakout level, if you will. That's down here between 25.25 and 25.06. That's the key support level. We don't want to see it go lower than that. Otherwise, we risk the potential for a head and shoulders pattern to form, and then a much larger move to continue to the downside there on Amazon. I do want to break it to the weekly chart because I do think this is a little bit telling here. The weekly candle on Amazon is not looking so hot. I do think, this is quite an impressive move that we've had ever since COVID sort of started here on Amazon, and this inverted hammer that we're forming up here now at the all-time highs after a pretty overextended move, it might be the signal that we are going to start to see some sort of pullback. But again, this is sort of the key area on the chart that you want to be paying attention to, right around 25.25 to hold as support. So if we see a pullback into it, that might be a good area to start buying for a risk versus reward trade, where we have a stop loss down here with targets back above here for something like a 2-to-1, 3-to-1 risk reward ratio there. So one thing I do want to point out while we're still on the weekly time frame is that we have had inverted hammers form on Amazon in the past up at all-time highs, and they've just been gobbled up. The price has continued on in the upwards direction. So does it mean that we're going to see a crazy pullback? No, not necessarily, but it is one thing to add into your analysis. So that's going to wrap up this week's episode of the Weekly Watchlist. If you learned anything new or found this video helpful or informative, certainly share it with a friend who might benefit by learning from this type of analysis. Lastly, leave the video a thumbs up and subscribe to the channel if you want to be notified every single time I drop a new video. With that being said, I wish you a green trading week.